All right. Hello, welcome. I am going to be talking to you about my favorite indicator, the Silver Cross Index. This is something we came up with, and we haven't seen it anywhere else at this point. And we think that it is really one of the best indicators out there. And I'll be explaining how it is used. We'll look at live examples. But before I get started, let me give you a little background on myself. I am, um, I have a bachelor's in mathematics and a master's of science in information resource management. And I have spent over 25 years studying the markets, probably longer than that. I think this chart is a little old. DecisionPoint.com is my company. I am the vice president and senior technical analyst there, but you'll also find me on stockcharts.com. I have a blog there. I'm a consulting senior technical analyst, and we have the DP blog, as well as we host the Decision Point Trading Room, which is free, and it is on our YouTube channel. But if you want to go and attend live, you can go simply to our homepage and you can register to join us on Mondays at noon Eastern time. And there we go over the market. We also go through symbol requests, talk about various interesting things. Like this last week, we looked at CrowdStrike and some of the problems that were on the chart before the problem that they had. So there was actually some warning going into CrowdStrike, into the problems they had. And it's some of the interesting things we do talk about on there. We go over earnings and different things like that. But I welcome you to join us in that free trading room. So I have to start from the beginning here to talk about the Silver Cross Index. And what's important to understand is it's a participation indicator, but we need to understand more about participation before we can really get into the Silver Cross itself. So various measures of participation. The ones that we use are the price above their 20, 50, and 200-day EMAs. So we look inside an index or a sector and we look at how many stocks are sitting, their price is sitting above those key moving averages. There are other various breadth indicators that we use. And then there, of course, is the Golden and Silver Cross indexes. I'm going to be talking primarily about the Silver Cross Index, but you can't talk about the Silver Cross Index and not talk about the Golden Cross Index. So we'll be talking about it as well. So some of the breadth indicators you may be familiar with: new highs, new lows, advances, declines, volume ratios. Basically, they give you a cumulative view of the market and indexes inside, and there's no weighting on it. So when you're looking at new highs, new lows, you're looking at an actual raw number. There's no weighting to it. Advances, declines, same thing. There's no weighting, which honestly right now I think is kind of important given the bifurcation of the indexes right now, where we have mega caps are starting to fail, and yet we have the broad market trying to come in. So these participation indicators have become even more important as we look within the index to see whether there's a healthy amount of participation despite what's going on with the mega caps. And so I think it gives us a really good picture of what the internals are. So here's a new highs, new lows chart. We also track the 10-day high-low differential. So you take the 10-day moving average of the difference between new highs and new lows, and that's what you get right here. It's really pretty good at coming up with lows. A lot of times you'll get it to turn down before it declines. So it's something we like to watch. And you'll notice that right now, this one is dated back in November of 2023, but you can see right back here that it was starting to turn down. I apologize, I wanted to put in new charts. I did get some new charts in here, but these are unfortunately a little bit old, so I apologize for that. The other thing we cover, again, the advances and declines. So the net advances declines, the net advance decline volume. What we found interesting with some of the days of trading that we've had recently is where we would have a rally. The mega caps would push that rally upward, but you would still have negative advance decline volume and negative advance declines. So it gave us an insight into the fact that there were still internal problems going on. Again, this is from May of 2022. And I would talk to you a little bit more about climax analysis, but that's actually for another day. I will say that yesterday we did get a downside exhaustion climax. So we told all of our subscribers that more than likely we were going to see a snapback today. And that's exactly what's happening. So our analysis is pretty right on a lot of the time. All right, price above moving average indicators. Like I said, these are very important. We want to know how many stocks have their price above a 20, 50, and 200-day moving average. This gives us a really good idea of the health of the index inside when we have most stocks with price above those key moving averages. More than likely, you're going to continue to see those averages rise. In fact, with EMAs, I don't know if everybody is familiar with this, but if price is above an EMA, the EMA is going to automatically move toward price. So if price moves below the 20-day moving exponential moving average, then the exponential moving average, the 20-day, will start to fall as well. So it's one of those nice things that I like about an EMA. Also, we use exponential moving averages because it does tend to put more emphasis on near-term data, and that's most important to us. That's why we use the exponential moving averages. But of course, you could use simple moving averages if you'd like, but our indicators are set up for exponential moving averages. Some of the other indicators we use is percent of rising momentum. We look at the percent of buy signals within the index. All of these are considered participation indicators. But let's talk about the golden and silver cross indexes. Now that you have kind of an understanding of what the participation indicators do, and you're familiar now with the price above the 20, 50, and 200. Now we can take it to the next level and talk about the golden and silver cross indexes. A golden cross most people are familiar with. That's when the 50-day moving average moves above the 200 moving average. And so you're familiar with that. Well, the silver cross is a 20-day EMA moving above the 50-day EMA. So you have a silver cross. Golden crosses are a really good sign that you've got a stock that's going into a bull market phase. The silver cross gives you the bias of the chart. If you've got a 20-day moving average above the 50-day moving average, more than likely you're doing well, you're healthy, you have a bullish bias. So that's one of the reasons we follow the silver cross. And then what we do is we tally the percent of stocks on a golden and silver cross. So the golden cross index measures how many stocks have a 50-day moving average above the 200-day moving average. So that's your golden cross index. Your silver cross index is going to measure how many stocks, what percent of stocks have a 20-day EMA above the 50-day EMA. And as I said, if you have a stock with the 20-day EMA above the 50-day EMA, more than likely you're looking at a stock with a bullish bias. So that's why we want to track these with that silver and golden cross index. Here is a look at the silver cross and golden cross index. First of all, I will draw your attention to the bottom 3 windows. This is where we look at the percent of stocks above their 20-day EMA, the percent of stocks above their 50, and the percent of stocks above their 200-day EMA. This is a chart as of yesterday, so I'm giving you upfront information. One of the things that happened is the Silver Cross Index did top yesterday. So we know that there are some issues going on within the index. And then also notice that the percentage is only at 65%. That's a healthy enough percentage, but that tells us that less than 2/3 of the index are on silver crosses. And that means that we only have a bullish bias on about 2/3 of the index. That's a good amount, but there's still that third that aren't participating. The Golden Cross Index, again, measures how many stocks have a 50-day EMA above the 200-day EMA. And right now, that is reading at about 73%. It is still rising, but you can see really it had flattened out during this bull market phase. So it's still at a pretty good level. It's not gotten down into oversold territory like we saw back here at the end of 2023. At this point, you saw that both the silver and golden cross rose very quickly and hit overbought conditions. And then we continued to see price move up, and it set up a negative divergence here. You can see right here where this top is higher than this top. So that particular negative divergence led right on into this decline that we had before. So these are the kind of things that we're looking for on that Silver Cross Index. It gives us a really good sense of what's going on within the index past the point of what price is doing above the key moving averages. One of the things to also keep in mind is that you can track what the probability is that the Silver Cross Index will rise or the Golden Cross Index will rise. And you can get that from these percentages down here. So for example, as I told you, if price is above the 20 and 50-day EMAs, then those EMAs are going to be rising. And so they'll be rising. Give me a second here. This always happens to me now and then. Okay, so we know that the price needs to be above both of those moving averages, but in particular, it needs to be above the 50-day moving average because that will prevent the loss of a silver cross, right? Because price can't go below the 50-day moving average. The 20-day can continue to move down, but it won't go below the 50-day moving average unless price is below the 50-day moving average. So this tells us with only 60% above the 50-day moving average, the Silver Cross Index is likely to continue lower because now price is pulling down the amount of stocks that have price above their 50-day EMA. So it is vulnerable to more decline, which is a problem right now for the market. Now, when we look at the Golden Cross Index, it's a similar situation. You need price to be above the 200-day EMA to prevent the loss of that Golden Cross. So we look at how many stocks are above their 200-day EMA. Currently, that is 70%. The Golden Cross Index is at 72.6%. So that means that we could see the Golden Cross Index top. It hasn't done that yet, but it's certainly vulnerable to do so because these percentages right here are lower than the percentage for the Golden Cross Index. Now we're going to talk about market bias. I alluded to it when I was explaining what the silver and golden crosses do, but the silver cross in particular gives us the market bias in the more intermediate term. So if price is above the 20, 50, and 200-day EMAs, you have what we call 50% bullish thresholds. So what I'm looking for is, like we saw in the last chart, I'm looking for price, the percentages of stocks. I want at least 50% of them to be above the 20, 50, and 200. That gives me a short-term market bias that is bullish. So that's what I'm looking for, are those bullish thresholds on that. So that gives me my short-term market bias. Then I compare those to the silver and golden cross indexes, which we just did. We compare what those percentages are in comparison to what the silver and golden cross indexes are reading. And that tells us whether they're going to rise or whether they're going to fall. If participation is lower, then it equals a bearish bias. So what I'm saying here is that if the silver cross is below its moving average, its signal line, then you have a bearish bias. If it's higher, if the silver cross or golden cross index is higher than the signal line, then the bias is bullish. The silver cross index is above its signal line. Like I said, that's a bullish bias. Golden cross index above its signal line, that's a bullish bias. So I just want to make sure that concept gets through. The bearish bias is when the silver cross index or the golden cross index are below their signal lines. So that's what you want to see, is to keep them above. And if you recall, currently both are above their signal lines. So we still do have a bullish bias in the intermediate and long terms, which means the bull market itself isn't necessarily in trouble. We do see some problems ahead with weakness, as we've just been experiencing, and we'll probably experience more, but right now we're okay. As I said, you've got these percentages that are above the signal line. So that means we have a bullish bias in the intermediate term and a bullish bias in the long term. All of our percentages, like I said, are currently above 50%. So in the shorter term, we also have a bullish bias going on. Here's our bias table as of yesterday. So basically what I do is I look at each index and I compare where the silver cross index and golden cross index are in relation to their signal lines. So the IT bias, the silver cross, that's when the silver cross is above its signal line. Again, I'm trying to beat that one into your heads. So in this case, currently, most of the indexes are showing bullish biases, but look at which one changed yesterday. Yesterday, the NASDAQ 100 lost its bullish bias. The silver cross index crossed below its signal line. So now we have a bearish bias for the NASDAQ 100. The other ones that are still struggling are materials. They currently have a bearish bias, but technology also had the silver cross index move below the signal line. So currently the bias for technology is now bearish. And you'll see that transportation, that was another one where we lost the bullish bias, and semiconductors are holding a bearish bias right now. So you can see how the silver cross index has really picked up on the weakness that we're experiencing in these areas. Like I said, semiconductors switched a while back, so we already knew there were problems going on within that particular industry group. So these are all the ones that we cover. Let me go back again. These are all of the sectors, indexes, and these are the industry groups that we cover with the Silver Cross Index. So we have quite a bit. It's all available on our website. I'll show you where shortly. So at this point, we're looking at a bullish bias in most of the indexes, and this tells me that the broad market is participating still. But as you saw, the Silver Cross is moving lower now on the S&P 500, and there's a high likelihood we're going to lose that bullish bias very soon. Here is the longer term version of the golden and silver cross indexes. This is a really good example of those divergences I was talking about. Here you can see that one we looked at earlier where we had the negative divergence going in right before this decline. We are looking for some problems because we had negative divergences leading into this top. which told us that we should expect a possible decline because of these negative divergences. But really, you can see where things flipped, where the broader market started to participate more with that pop here on the amount of stocks above their 20-day EMA. You can see the pop on the stocks above their 50-day EMA, and there's a pop even on the stocks above their 200-day EMA. That told us that the broad market was starting to participate, but was it enough to keep the index moving higher? Unfortunately, no. That is a casualty of cap weighting. And that is what's made, I think, all of our jobs a lot more difficult of late, is when you're trying to study the benchmark index and you have it moving higher, where the majority of stocks, as you can see here, are not participating in the move. They're getting lower and lower, getting less and less participation. So there are problems internally, yet the mega caps are able to keep things going. Now we're looking at mega cap failure. That's causing this decline, but we're also starting to see some of that participation bleeding off. So don't get too fooled by the fact that everything's going well and that we're seeing the move into the broader market. There's still some problems going on under the surface. And in the S&P 500, they're not moving into the market. They're moving out as the price of moves below those key moving averages. So that is something that we're looking at right now, is trying to decipher what's going on under the surface as the mega caps sway the index back and forth. All right, so what I thought I would do, it didn't take that long to discuss the Silver Cross Index. So what I thought would be very interesting is to go and look at those charts that we have under the hood and give you an idea of what's happening throughout the indexes and the sectors looking at the Silver Cross Index. I think it's important to get real-time information to be able to understand what those indexes do for you. So let's go ahead and move to some live examples. All right, here we go. So here's the S&P 500. We already looked at these. I'm noticing some questions coming in. I suspect the percentages are dollar weighted and not the number of stocks. No, the percentages of stocks above their key moving averages is not weighted in any way, unless I don't understand what your question is about. So it's the percentage of stocks or the number of stocks. It doesn't matter if they are cap weighted or not. It's just going to show you where the price is in regard to those. So here's the S&P 500. We've talked about it and what's going on under the surface here. Let's look at the mid caps, where we are seeing some movement into them. We're getting some really nice rally going on today, and we have been seeing it. But you can see, even though everybody's talking about this broad market move, the mid caps are still moving on their way down. And look at what's going on beneath the surface here. The percent of stocks are moving lower. We're getting less participation in the move, even as price is trying to move higher. And then you'll notice that the Silver Cross Index did top, and it is sitting around the same percentage as the S&P 500. So I don't see a huge amount of difference in the mid caps right now. And in fact, these percentages down here, I believe, are lower than what we're seeing in the S&P 500. The small caps. This is again where we're seeing a lot of action. This looks like a pretty nice little flag formation. So I'm not going to discount what's been happening for the small caps. Certainly looking much better. They had a really great breakout. But again, notice that we are starting to see some of the participation bleeding off. Not as much. We have 70% reading, 73, 74, 75%. Silver Cross Index is still lower than the amount of stocks above their 20 and 50-day EMAs. So that tells me that the Silver Cross Index could continue rising, which is a good sign, but it is getting close to that 73% mark, which means that the Silver Cross is vulnerable to a decline right now. But we don't want to see this participation bleeding off like this, especially when we're talking about the broader market participating more and doing very well. You can see, though, there's no doubt that they have been outperforming the S&P 500 by a by great leaps and bounds right now. It's such an interesting market right now, seeing this switch out of mega caps and into small caps. My understanding what I was thinking would happen was when the mega caps failed, the whole market was going to fail. And instead, we're starting to see rotation, which is pretty good for a bull market move to continue. Let me get a drink of water here. So the Dow, you can see a pullback to support. Our prime price momentum oscillator is on its way down. This has always been my favorite indicator, but I opted to move to the Silver Cross Index after we developed it. I find it to be even more helpful than the PMO at times, to give me a really good read as to what's going on again within the index itself. Look at the participation. We're in the 30s and 40% level here. The Silver Cross Index is still at 70%. So still 70% of the stocks within the index have a 20-day EMA above the 50-day EMA. So that's a good sign. It could, it's healthy. The problem is that these percentages are so much lower than the Silver Cross Index. It's already topped and it's likely to move lower. Stochastics are moving down. Interestingly, though, the Dow has also been outperforming the S&P 500, even with some of these low participation numbers. But I'm not liking what I'm seeing. The good sign today is that we are getting a bounce off of that key support level. So that's a good sign for the Dow Industrials. But I'm seeing this terrible participation under the surface, and I have to wonder how much higher it will be able to push if we don't get the participation under the surface. The NASDAQ Composite is doing quite well, right? Not really. You can see the decline, the loss of support levels, loss of the 50-day EMA. There are some serious problems with the NASDAQ in general. The one thing I could say is that we maybe are looking at a flag formation. I'm not enamored with that particular conclusion, but we certainly have to consider that. That looks like a nice long flagpole, and there's your flag pulling down here. Those are bullish patterns, they're continuation patterns, and they tell you that we should get a continuation to the upside. Right now, though, that flag is getting pretty long, so we'll see if it turns into a flag or if we're just looking at a topping move here. Looking under the surface, we're in the 50% for the stocks above their 20 and 50-day EMAs. This is lower than the Silver Cross. The Silver Cross is only at 56, 57%. So there are problems internally for the NASDAQ, and they're very clear when you look under the surface and see these lower percentages of stocks. Now, we do have a Silver Cross Index that is still rising on the NASDAQ, but that is not going to last because these percentages here are below the Silver Cross Index. And again, if you don't have price above the 50-day EMA, the 50-day and 20-day EMAs are going to be moving lower. And that will get you the negative crossover, which will take percentages away from the Silver Cross Index. And look at the underperformance here of the NASDAQ to the SPY. So we're getting a really clear picture of who's outperforming, who isn't, but we're getting the internals as well to give us the information that we need to know that we're either in a good stead or in bad stead. We have to worry about the internals or not worry about the internals. Um, I'm noticing the NASDAQ is down right now on the day, whereas we're seeing a rally in some of the other indexes. It's just not very healthy over there in the NASDAQ. The NASDAQ 100 looks the same. It is getting a little bit of a bounce right now, but look at the percentages here. 28% above their 20-day EMA, 36% above their 50-day EMA. This is well below the Silver Cross Index, which is at 65%. And you can see that we have a negative crossover on these as well. So we're looking at some big problems going on here for the NASDAQ 100. And these participation numbers continue to bleed off. And it doesn't look like we're going to get a rebound anytime soon here until we get some stocks with price above their 20 and 50-day EMAs. Otherwise, the Silver Cross Index is going to continue to fall. The S&P 100, similar price pattern, obviously. And we're reading in the 50 and 60 percentile here on participation, which is much better than what we've seen on some of those other indexes. And we have a Silver Cross at 73%, which is pretty healthy here for the S&P 100. But we do see the Silver Cross is in decline, and these percentages are well below the Silver Cross Index, which means the Silver Cross Index is going to continue lower. We'll probably see it move below its signal line, and that will give us a bearish bias. But currently, the S&P 100 does hold a bullish bias. Now you can see the underperformance going on here against the S&P 500. So again, these mega caps, these larger cap stocks are really starting to suffer, but we're getting some of the action back into those smaller cap stocks. Again, look at IJR, the S&P 600, much higher readings. But again, I would warn that we are starting to see some of this participation bleeding off, and that means that this rally may not be as lasting as we may think. So that's our indexes, but it's time to go and look at some of these sectors. Hopefully everybody's getting a lot of information out of this. Communication services. This is an area that's been seeing some downside pressure along with technology. Google's earnings were not well received. That certainly did not help things for communication services, and many of the other mega caps saw some decline yesterday as well. This is a sector that has been doing very well. You can see that its Silver Cross Index is in the 80th percentile. So we have 83% that hold a 20-day EMA above the 50-day EMA, very much like what we're seeing on the sector itself. But we're seeing all of these stocks moving below the 20 and 50-day EMAs, just like it's doing on the sector. It's now moved below both the 20 and 50-day EMAs. That gives us a bearish bias to the chart, and we have in the short term. So that's not anything we want to see. We don't have a dark cross yet. That's the opposite of a silver cross. We don't have that yet on comm services, but certainly if price remains below that 50-day EMA, we're going to lose that silver cross. So at this point, we have a very high reading on the Silver Cross Index. It's well above its signal line, but we have a Golden Cross Index that's doing the opposite, moving in the opposite direction. So we're losing some of the strength in the foundation. And while we have a pretty good foundation in the intermediate term, these lower percentages are going to drag this Silver Cross down very quickly. And I wouldn't be surprised to see a bearish bias pop up on comm services very, very shortly. You can see that the sector is underperforming the S&P right now. And looking at these participation numbers, I just don't see anything here to push the sector higher. Consumer discretionary also feeling a lot of downside pressure, getting a bit of a rebound today, but these rebounds aren't really that impressive to me today, honestly. We still have lower highs, we have lower lows, nothing that's really changing the face of these indexes and the weakness that they're already showing. So we have consumer discretionary. The Silver Cross Index is much lower at 61% in comparison to comm services, which you remember was at 82%. So certainly some issues going on with consumer discretionary, not the kind of foundation that we need to push prices back up. And you can see again the loss of participation of stocks above their 20, 50, and 200-day EMAs. That's a bad look. You can see underperformance coming in here. This is an aggressive sector, and we're seeing some failures going on, and that is generally not good for the market. Let's look at the defensive consumer staples. Much different look here. And I've been kind of interested in this area. We have a flat top here on price right across there. And we have rising bottoms. That's an ascending triangle chart pattern. And that did suggest we would get the upside breakout, which we did. We did end up with a pullback toward that breakout point, and now we're starting to see a rally. I have to say, though, today's rally is looking a little thin, and we do have a long wick on the candle. It's not a candlestick here, but I know the candle would look like this with a long wick. And that's a shooting star, not something we want to see. So again, there's still these little issues going on under the surface for all of these sectors. This one is really low on its Silver Cross Index. It hasn't, even with this rally, it hasn't done much. Golden Cross well below its signal line. We have 50 percentiles here for the percent above their 20 and 50 and 200-day EMAs. So we do have kind of a mediocre look at consumer staples. This is an area that I've been trying to pay attention to, have been paying attention to, I should say, as a possible place for rotation as people move out of those mega caps. But we're losing some participation in growth, but we haven't lost enough of it yet. So we're not getting that action here in the defensive consumer staples group at this point. Energy. Energy is making a nice little rebound here. It's on a rising trend. I like that look. Definitely a really strong rally today. We've got the PMO bottoming above its signal line. But under the surface, there are problems. We have very low readings on participation of stocks above their key moving averages. Only 22% are above their 20-day EMA right now. So a lot of these stocks do not look like the sector itself. Right now, the sector itself has price above both the 20 and 50-day EMAs. That should bring everybody up. I'm thinking that we're going to see some more action here in energy. We have the Silver Cross Index, which has topped, and it could move lower because these percentages are much lower than the Silver Cross Index. So there's still weakness under the surface here for energy that we need to be aware of. But it does look like a sector that's starting to find its way. You've got performance going on now against the S&P 500. So we have these low readings, but things generally get as bad as they get before they get as good as they get. So we're getting into that place where it really got about as bad as it was going to get. You could see oversold readings here. And now it's looking like it's time for that reversal to the upside. So I am liking energy. I would like to see that Silver Cross Index make a reversal. And if we start to get more participation under the surface, that will change. I'll be really interested to see this chart after the close today. These indicators all are updated after the close. They usually come in by about 5:30 Eastern time. And that's when we start writing our reports. And we update these charts at 5 o'clock. Actually, let's see, 5, I'm doing this wrong, 2:30. Yeah, at 5 o'clock, I'm sorry, 6 o'clock, we do update these charts, but we also update them at about 1:30 when a lot of this information is available. But by 3 p.m. Pacific time, you will have these charts updated and available for your review. Financials have been doing fairly well. They are pulling back, but they're pulling back to the breakout point and not falling below. We have a PMO that has bottomed above its signal line or surged above the signal line. We have a very healthy reading on the Silver Cross Index. But again, we're starting to see a little bit of bleed off on participation here. And these percentages are below the Silver Cross Index, which has topped. So there is some weakness in here in the financials, but ultimately, these percentages tell us that over 2/3 or more, even 3/4, are above their key moving averages and have a 20-day EMA above the 50-day EMA. So we have a pretty good bullish bias here in financials. I could see them moving higher, especially given this nice PMO bottom above the signal line. I like that look. Sorry, I needed a lot of talking here. I needed some water. What we can see here on the Silver Cross Index for the healthcare sector, we've got a breakout. It looks like we're in a short-term rising trend, which looks good for healthcare. Although I have to say today's trading, it's lower, and we do have a long wick on a candlestick here on this OHLC bar, and that's a shooting star, and that is not a good sign to see, especially on a decline today. So it is healthy. Pun not intended, it is doing well at this point. But how well is it doing? Well, the Silver Cross Index is a little bit above 50%. So that is a bullish bias above the signal line as well. So I would say we still have a somewhat bullish bias in the short term as well. Golden Cross Index has crossed above its signal line, so that gives us a bullish bias in the long term. And we have really good participation under the surface, and it's not dwindling. It's continuing to rise. So this sector is really set up well to continue to move higher. It's got some good participation under the surface. Silver Cross Index is very low, but these percentages are much higher than the Silver Cross Index, which means that although it did top, it should turn itself back around very quickly. Look at the outperformance of this sector. Haven't heard a whole lot of talk about the healthcare sector, but it's been quietly performing very well. Industrials are having a good day today. They did pop out above overhead resistance, but did pull back. They're sitting on the 50-day EMA, which is a good sign to me. And again, we have another PMO that surged above the signal line or bottomed above the signal line. So that's a good sign as well for industrials. But again, under the surface, I see problems. These percentages are lower than what's going on here on the Silver Cross Index. Silver Cross Index does show 2/3 of the industrials with a 20-day EMA above the 50-day EMA. So that's still pretty positive. But these percentages are below it. And that means that it could continue to decline. But again, after the rally today, it's a pretty strong rally on industrials. I expect this participation readings to improve. It'll be interesting. This will be another chart that I think will be very interesting at the close today. Look at the outperformance of industrials. Did you have any idea they were outperforming to this degree? I did. Stochastics are moving lower. So there are still a little bit of problems going on under the surface, but I like today's rally off the 50-day EMA, and the Silver Cross Index is healthy enough that we should see the rally continue. We just need to get this participation below the surface to get back up there. And I expect with a good rally today, that's going to change by a lot. Materials are really struggling here. The Silver Cross Index is at only 38%, and currently it is reading below its signal line. So there is a bearish bias in the intermediate term. You saw that on the table that we looked at earlier. And we're losing participation still. You can see that the Silver Cross is at the same percentage as the percent above the 50-day EMA. That's why I always talk about this being kind of the delimiting factor of what's going to happen with the Silver Cross. You need at least as many stocks above the 50-day EMA as above the percentage above the Silver Cross in order to see it rise. Sometimes you'll see it fall just because you'll get a little bit of movement there where some drop below their 20 and 50, but it's not enough to bring the Silver Cross Index down because they reverse very quickly. So sometimes you will see the Silver Cross Index at a lower value than the amount of stocks above their 50-day EMA. Give me a moment here. All right, we're getting down to the end here. So let's see. Real estate. Let's go through these a little more quickly. Real estate seeing some bleeding off, but look at these percentages, really, really high for real estate. So at least they have the participation under the surface to reverse this topping formation. We could see a bounce off this support level, but we need to watch these numbers very closely. Currently, the same percentage are above their 50-day EMA as the percentage of stocks with a 20 above the 50-day EMA on that Silver Cross Index. So the Silver Cross Index is likely to continue to stagnate here. But if we start losing participation further on real estate, there could be some problems that develop. Technology, we know what we're going to see here. Look at that decline. It's dropping below this level of support now. PMO is just flying lower. Look at the Silver Cross Index. It has dropped below its signal line, giving us that bearish bias that we got yesterday. And look at the participation, 30%, 46%, really low amount of stocks above their key moving averages here. And that is what's dragging this Silver Cross Index lower. It does suggest we're going to have further problems in technology. And utilities. Utilities we see are very healthy. They're in a rising trend, getting ready to hit overhead resistance. But look at the Silver Cross Index at 83%. It has topped, but I'm not too worried about it because these percentages of stocks above their 20 and 50-day EMAs is above the Silver Cross Index. So there's a really good chance that the Silver Cross Index will turn back up on utilities, and looking pretty good. Outperformance going on here in utilities. Defensive area of the market that's doing fairly well. Not having a good day. These are all of the industry groups we cover. I don't have time to go through them. I will look at gold miners. A lot of people are interested in gold miners, especially now. They were trying to hold support. We lost it today in a big way. We were already seeing the problems here. Silver Cross Index was still holding and still is holding at a very high level. But look at the bleed off on participation here. Look at stochastics falling. You can see that relative strength started to peter out here. There were some problems here that did give us a sign that we were going to see a drop in gold miners. And it doesn't look too good for them moving forward based on the loss of participation. It's not as horrendous as it could be because we did see some declines back here and we didn't lose that much participation there. So this is what we're worried about. This is what I'm looking at as a possibility where we're going to get a lot more stocks moving below those key moving averages on gold miners. So be careful with gold miners right now. All right, let me go and show you my website. So here is my homepage. I do 2 letters right now, the Decision Point Alert and Decision Point Diamonds. I'm also going to be launching a new scan alert service on next week. Very excited about that. The scan alert service is going to be giving you all of the results from my proprietary scans that I run that help me pick out decision point diamonds. So Decision Point Alert is your one-stop shop. You've got to get this one. This is going to give you the trending condition of the market. It covers dollar, Bitcoin, gold miners, crude oil, bonds, yields. All of that's in here. It gives you a very clear, concise, easy to read report about what's happening in the market right now. So it's a really important one to have. You don't want to go out there investing unless you know what's happening in the broader market. You need to know your chances are, your risk levels are not as high. You need to know that we're in a bull market. You need to know when the Silver Cross Index is falling. These are the kind of pieces of information you're going to get in the Decision Point Alert. Decision Point Diamonds, this is where I give you stock picks. So I run those proprietary scans and then I go through them and I pick out 10 stock and ETFs per week that I think look good moving forward. So I give you the analysis so that you can learn how to look for good charts. They're not all winners, but they certainly do quite well. I don't have a track record, if you will. I don't track that, but I can tell you that in a month's time, generally I only see maybe 4 stops hit out of 40 stocks. So out of 40, we do well. Maybe not all of them have huge gains, but certainly you're not going to get stuck with a bunch of losers from the Decision Point Diamonds. That I can tell you. So the scan alert service, like I said, is going to launch, and that is going to give you those results emailed to you after the market close of all the stock symbols that we see looking good moving forward. They're not all winners. Again, you have to do the analysis yourself. You need to make sure that the chart itself looks good, that momentum, everything else should be doing well. Momentum should be good, stochastics, those types of things I pull to make sure that the scan results are clean for you and have that good setup. So that will be running soon enough next week. Costs for our subscriptions are very, very low. These are, again, newsletters. These are supposed to keep you up to date daily. Think of this as your little Wall Street Journal for technical analysis. And again, these are where you're going to get those 10 stock and ETF picks per week. And one of the other really great things about Decision Point Diamonds is that I have a live diamond mine trading room on Fridays. This is only for subscribers. It's a small room, so all of your simple requests will get looked at. All of your questions will be answered. I help everybody with their trading. It's an excellent way to beef up your trading skills. Currently, we do offer the bundle, but I will tell you that goes away next week. So if you want to get both of these at a discount together, this is it. You need to do it right away. That's what is going to happen there. So let me go ahead and share my special for you today. There's the ad for my free decision point trading room. I run those on Mondays. Again, help you with your trading, give you an update on what's going on in the market. My father, Carl Swenlin, is there. He gives you his outlook on the markets and sectors, and also a really good insight on questions. He brings very interesting subjects to the table. And I think it's well worth your time because that's all it costs. It's free. Just go to that homepage. I'll show you it again, and you'll be able to register for that. All right, so let me go back. This is only good. This one is only good for, this is not just for the bundle. This also works on any of our reports. I'm sorry that it says subscribe to the bundle. Subscribe to any package and you can get a free 2-week trial just to try us out. We run this all the time. So just use the coupon code DP trial 2 and that'll get you the 2 free week trial. However, if you really want to jumpstart things, I have an incredible special for you today. You can get your first 2 months of any of our subscriptions, any of them, at 75% off. If you get the bundle, that's going to save you about $179 in 2 months. So definitely recommend you try this. All you need to do is subscribe with the coupon code DPSAVE75. And I think, I'm sorry, David, I didn't send you these beforehand, so I'll give you a chance to write them down for me. But again, save 75% off your first 2 months of our subscriptions with DP Save 75. But if you want to get that bundle package, you need to do it now. So go there and get that. For those of you watching the recording, I apologize. The bundle is no longer available, but this coupon will work for any of our reports or the scan alert service when it launches. All right, let's go back to my website here. I want to show you where you can register for that free trading room. So if you go to our homepage, I would recommend, first of all, that you sign up for our free newsletter. You'll get information about presentations like I'm doing today, but you'll also get the free Decision Point blog articles that we do periodically. So you'll want to sign up there. I do not inundate you with email. I do not share your email. You will not see a ton of email come through your inbox. I don't email you every day. I email you periodically, maybe once a week, twice a week at most, if we have free articles coming out. So sign up for my free email list. And this is where you register to join us on Mondays at noon Eastern. So I hope that you come in. I, again, would like to share with you that special that I'm offering. 75% off your first 2 months. Give it a shot. Use the coupon code DPSAVE. And that's all I have for you today. Here's where you can find me at decisionpoint.com. And this is my email address. I do answer all the emails I